Hashrate is sponsored by TauStats. TauStats is the leading Bittensor explorer. You can buy, sell, and stake Bittensor on TauStats. TauStats can be found at taustats.io, and there's a link in the Hashrate show notes description. Hello, everybody, and welcome to Hashrate. My guests today, and there are many of them, include Arash, Erkin, and Victor of Subnet 35, Cartha. So you guys have been cooking up something pretty amazing, and I have a little bit of a brief on it, but I want to hear it from the horse's mouth. So Arash, why don't you tell us, what is Cartha?
Yeah, so Cartha is essentially a liquidity as a service subnet. So it's an engine to provide liquidity, and so one thing that and specifically what we're targeting in the beginning here is the ForEx market. So the largest market in the world for trading, $7.5 trillion in trading volume a day, and so that's our target market for the application.
Yeah, so Forex markets, for those who don't know, you might have heard that term, but not really known what it is. It's where stable coins, to put it in our parlance, from one country, so dollars are exchanged for British pounds or Japanese yen or whatever, right? And these various currencies fluctuate daily, right, relative to one another. And so it is trading those currencies, like they're sort of like meme coins for countries, right? Is sort of one way I think of it, right? It's sort of like, what do people think the future prospects of the United States are? Well, that's reflected in how much they evaluate the dollar, right? So, so you have all these sort of country meme coins trading against each other, but it is, I think it's Earth's largest market, right? You said $7.5 trillion, and just for comparison, all of crypto is 400 billion. So, oh my God, is this Earth's largest addressable market?
100%. This is the largest market you can trade. We are, it's 19 times the size as crypto, as you mentioned. This is our major target market that we're familiar with at Taushi, because we obviously build a decentralized prop firm. So we're familiar with it. And just what we're trying to tackle here is enormous. That's exactly what it is. It's enormous.
So what is the experience like today for people that want to trade in Forex, right? Like I want to kind of ride these floats and speculate on what's going to go up and what's going to go down. What do people do today, and what is that experience like?
Well, I think just really quickly, I want to introduce Erkin, who is part of this team. And so Erkin has a lot of experience in this domain, and he's familiar with all the different types of traders that may be looking to trade Forex. And so I'll let Erkin kind of hit on what are the different types of traders, what does this market look like, where do they go right now, and the difference between that and what we're building.
They go to brokers, the short answer. The longer version is, first of all, people hear some sort of FOMO or some sort of ad somewhere that somebody's making a killing, and they start trying to familiarize themselves with trading journey. The only avenue for retail trader to access markets today is through CFD brokers or...
what is a CFD broker? Is that like Charles Schwab?
CFD is so just to unpack that a little bit, contract for difference. So what it means is, whilst the trader is speculating or gets an exposure to a certain asset, let's say euro, dollar yen, gold, oil, whatever the case may be, they don't own the underlying asset, right? So let's say if you go to a store and buy gold, all of a sudden you have a gold coin in your pocket, and the gold price goes up, you go back to the same store and you sell it, you made a little bit of a profit, right?
Yeah.
So that's more sort of deliverable assets. CFDs, contract for difference, are types of products that gives exposure to multiple asset classes, not only foreign exchange, to retail traders, so they realize the difference in terms of market movement in form of dollar or euro, depending on where the broker is already coming from. So essentially, these are normally, you would like to expect that normally these are regulated brokers that are based out in UK, in Middle East, in Europe somewhere, or offshore. Yeah. But this industry has traditionally a very negative perception, because a lot of these guys came up, a lot of sort of bad players came to the market very early days. Yeah. And they were cold call selling people dreams that they're going to become millionaires and so on and so forth. They can do investments. And unfortunately, these guys only had a deposit function. without the ability to withdraw profits.
Oh my God. Okay.
So then the regulators started catching up and stuff. So the global regulatory landscape evolved and allowed for birth and expansion of regulated, trusted, and relatively safe CFD industry that allowed retail traders access to markets. So today, somebody would go to Exness, to Equity, to Multibank, the various brokers out there, create an account, and all of a sudden they have access to various assets. They can deposit and trade.
And so just to be clear, this is not like it's not like crypto where you can just go to Coinbase and sign up. I guess it's more like Charles Schwab. It's sort of like Schwab where you go get an account and it's got that vibe to it.
It's something in between. So let's say if you go to Coinbase, you register, you create a user, you pass KYC, you do a deposit or on-ramp in the Coinbase case because you're doing crypto. And the CFD is a similar story. You create an account, you pass KYC, you deposit assets, and all of a sudden you start trading.
Tell me what sort of the state of affairs is right now with the competition and how reputable it is or is not.
Yeah, candidly, it depends, right? Like if you're just going to go out and want 25x leverage on a US KYC exchange, you're probably going to be okay, most likely, right? But the reality is if you actually want to trade volume, especially for smaller traders, that's why you want higher leverage, right? It's because you're not as big as the big guys. When you do that, you have to go to exchanges that you don't really know what they actually have as collateral on that book. Because back to kind of my example of, you go to the clerk, you get your little ticket and you come back and you close the ticket, you pay the difference. That's just an IOU that they're giving you, but you never actually see how much they actually have on the book. How exposed are they directionally one way or the other? Have they taken too many trades on the same side? And then now, if that trade is now in your profit, it's their loss, which means that when you go back to them, what guarantee do they have to actually fill that trade for you? And this is what we've seen in TradFi across the board. Derivative markets, have been cleaned up since 2008. But in 2008, AIG was the American Insurance Group. They were selling credit default swaps, which were essentially guarantee insurance on deposits at specific banks or on specific assets. Yeah. And they oversold them. They said, look, I could sell 100 million of these, right? And that maybe had an exposure of 2-3 yards. But in reality, they maybe only had a yard on their balance sheet to cover off the downside risk. They took all the premiums in, but those premiums don't add up to the actual underlying risk. And then when the risk hits, they can't actually pay you out and they go under. And this is the beauty of DeFi is that you know what that counterparty risk is. You know what's in the contract. You know that in a pure to contract situation, that will settle towards you, but you know exactly where that lands. And so you can never really end up in these positions if it's done right in DeFi where you end up with this kind of overexposure.
Wow. That is stunning. The belief that the state of the market right now is such that it's sort of shady and you don't know, you could easily these things could get bankrupted and you could end up not getting the winnings that you won. Right. And there's just nothing you can do about it. Whereas in DeFi, it's all smart contracts, it's robots. The liquidity is completely and totally understood and the downside risk is accounted for. So it cannot happen mathematically. These things protect against it. I mean, obviously you have to set smart contracts up right, but everything's transparent and everything is roboticized. And so it's very deterministic and it's fairer and it's safer.
and not to mention certain CFD platforms, they allow you to take more losses than what you deposit in the platform, then what they do is that they sell that debt to a debt collector, which will actually go out and find you. So it is not the cleanest of markets traditionally. Okay.
So now we understand that market, and it's sort of shady in some ways, or it was, but it's got like a bad rep, right? So, but it feels hard. It feels difficult to get into. So tell us about what you're building. What is your product going to do? And I'm assuming it's a crypto first product, so like anyone on Earth can access it, sort of like Uniswap. Is that kind of it? Or tell me what it is.
That's it. So let's take a step back for a moment and really understand what the problems are, right?
Yep.
And today the real issue is access and friction to access. But first and foremost, the retail users, they face a lot of complexity and they have to face it alone. Because let's be honest, right? Trading is a very lonely game.
Yep.
And first and foremost, they have to overcome their fear of missing out. And whilst they're battling with friction of onboarding and joining a broker, and then they get fed all sorts of ads and opportunities and potentials of becoming a millionaire or, making money, beating the market, and so on and so forth, where we all know that, market is a zero-sum game. tough luck beating it. In addition to this, centralized structures have a lot of control of what really happens under the bonnet, and not very much transparency on how that actually happens, right? So let's say you open charts on various brokers, you'll see completely different movements. Same thing in crypto exchange, right? Why do we all like decentralized stuff? Because we know how everything is made, where it came from, where it went, right? So there is traceability, there is transparency, there is inherent trust. You don't trust an institution that said these guys are good. You trust based on fact and based on mathematics and numbers that are in front of you if you're so willing to dig into that. So we're literally solving this problem. We want to build an exchange for global markets. Global markets, no borders, no barriers. Welcome to trade any asset that you're willing to. Quite simple as that. So
now any asset, you mean like, I guess to begin with anyway, it's the currencies of nations. So I'm trading, I assume, USDC for whatever the USDC equivalent is for the Japanese yen, something like that.
So at the beginning of the journey, we started thinking about let's tackle the most exciting things out there and what people are mostly interested in, and give product that people really like and people really look for. And that's FX space is really interesting. A lot of people trade FX. A lot of people trade gold. A lot of people trade these assets. So the first and foremost step to market for us is to bring out these assets to our users, because that's the most in demand. And then later on, we'll start scaling into other asset classes, other categories like commodities and so on and so forth. But it's a journey. It's a journey for us to begin to engage with the community, to listen to the community, to see what they want and what they need, and we'll give them access to it. But our narrative, essentially, the philosophy of where we're coming from, all markets and no barriers.
Okay, so it's a DEX. It's like Uniswap. Anyone can connect to it. No KYC, I assume, or is there KYC?
No KYC directly, but people got to protect their own assets. They have to take their own risk.
Right. Okay. So, and then, is there a name for this site, and when will I be able to connect to it?
Just really quickly, I don't think we actually got Erkin's introduction as to his background, which I think is important context. So Erkin, if you want to just introduce yourself and your background.
So my background, I started my career in financial industry about 16 years ago almost. And my first journey was at EBS. Back in the day, it was part of ICAP, which is one of the largest interdealer brokers. So your viewers understand, I joined the space when most of the trades were done over the phone. So dealers like Wolf on Wall Street will pick up the phone and give a price and make a trade. I was very fortunate to join the industry and a revolution of electronifying the market. So when a lot of trading was moving to electronic direction. So back in the day, there was only 3 main electronic brokers out there: EBS, Reuters, and Bloomberg. So I was lucky enough to start with EBS. Later on, I sort of moved on to Bank of America Merrill Lynch. Now it's just known as B of A. Spent quite a number of years there, sort of on e-trading side, working pretty much with the whole of the street, from CFD brokers to hedge funds to marketplaces and so on and so forth. And essentially was participating in evolving the markets into being mostly electronic. Then I sort of switched to digital assets and spent some time at Equinix, which was the first NASDAQ listed crypto group of companies. Then moved on to building my own exchange. And most recently, I was a CEO of a Category 1 licensed broker in the UAE. So we've taken it from the journey from 0 pretty much to 1 to where it is now.
Okay, so this website, this new DEX that we've been discussing, where is it up and running right now, or is it coming, and what is it called?
Yeah, so it's called 0x Markets.
Okay.
It's powered by the Cartha subnet, and it should be live within 90 days of this release. Is our goal. So really working through to kind of hit this really quickly and kind of get this out to market so users can kind of get started on this. And really the vision here is to build this permissionless Perp DEX where you can have access to these perpetual futures. And then on the other side, all this is supported by the Bittensor subnet, providing liquidity as a service directly into this network. And so it's a pretty cool, different idea in terms of the incentive mechanism. We can go into this in a bit more detail, but really the goal here is we just want miners to come stake USDC collateral into the pools. That becomes the sell side liquidity. The front side, we've got the whole trading side on that side where we're really offering the traditional markets that you get to see. So euro, dollar, CAD, odd, gold, et cetera, really kind of those core CFD markets that you see in the market, and then actually have the traders trade against the liquidity that the miners provide. And in return, the miners both earn their yield from the trading fees, plus all the alpha token emissions that come into that play. And then we have a few interesting elements in terms of how the tokenomics work on the alpha side to really kick off this flywheel, where on one side, we've got the supply side sorted by the subnet, and then the demand for that liquidity is being utilized by the Perp DEX, and really working the two sides together to really get this going and keep it growing the liquidity.
Okay, that's very interesting. So, and there's a lot to unpack there. So let me try to just recapitulate a little bit. So you have a DEX, and we just learned it's actually a Perp DEX. So there's leverage on this DEX, and I believe it's like sort of, is it 100 to 100x leverage up to?
So our goal is to get up to the upper bounds here of closer to 500x to really be competitive with other FX PerpDEX, FX CFD platforms. But yes, our goal will be to be high leverage here and to offer users that ability to take those kind of directional bets on FX currencies.
Okay, got it. And so if I supply liquidity, I'm earning the trading fees, right? So there's that. I'm also incentivized by Bittensor, by the Cartha subnet, with token emissions from the Cartha subnet. So I'm sort of double dipping here, which is good, right? We like that. Do I also earn liquidation when liquidations happen from those people who are playing around with perps? Do I get a piece of that, or does that go somewhere else?
No, absolutely. So really that's the goal here, is to have all the ecosystem tied in where any protocol revenues are going to the miners providing the liquidity. And really the miners, from their perspective, they're the opposite side of the P&L of the traders. So if traders do well, miners take a loss, but then miners, what they get is on every trade, they get those trading fees. And that's where we will eventually see the kind of, in any market that has the good two sides on that market, that's where you always kind of see a delta neutral strategy, and then the trading fees compound over time, allowing the LPs to earn that yield. But then on top of that, exactly to your point, you're also double dipping as a miner. You're also earning your alpha emissions. And the interesting mechanism here is that we're incentivizing the alpha emissions really twofold. One is the quantum that you're providing in terms of liquidity, and the second one is how long are you locking up that liquidity for. So not only do you now have a guarantee of a DEX that has liquidity because there's an incentive mechanism to bring that liquidity in, but you also have a guarantee, which you don't necessarily get on Uniswap, on Hyperliquid, or GMX, of how long is that liquidity available for. Where here, the miners are actually locking that up for periods of time. And so right now we're discussing exactly on the horizons, but it should be up to about a year. And then that liquidity is there guaranteed to keep those trades going and allowing the traders to know, hey, I will always have the ability to sustain this volume because this liquidity is there for me. And so it's really trying to solve all the kind of issues that we see in those traditional perp dexes or even normal dexes by using Bittensor as that incentive mechanism to get the behaviors that we want out of LPs.
So you said that I supply liquidity as USDC, and I think only USDC. So what about the other side of those trading pairs? Are those somehow synthetic? Are they collateralized debt position things? What are those?
Yeah, so maybe to go back to Erkin's example of, you buy a coin at the store, right? A gold coin. You go back to the store, you sell the coin. That's really what spot markets are, right? So you're able to buy the underlying asset. You're swapping that out for another currency. You come back to the market, you swap back out of it, right? The thing of how contracts for difference work, and this is similar to how perps works, is instead of me going to the store and buying a coin, I go to the store and I tell the clerk, I would like to buy 100,000 coins for this price. I pay them the amount for that. And then in return, I actually get a ticket. On that ticket, it just says my exact trade. And then when I want to close the trade, I go back to the clerk, and whatever the difference is from my entry price to my exit price, I get paid by the clerk or I pay the clerk. And that's really the mechanism of how you kind of do all these kind of perp dexes or contracts for difference, or really any kind of simple derivative. This is usually the mechanism that you have where you settle for the difference, and thus the name contract for difference.
Got it.
And so what we're doing here with the perp dex is exactly that, where the LP side of the miners, you're providing the liquidity, supporting the other side of the trade in USDC on both sides here. And there will be room eventually for us to look into providing other stable coins and other RWA equivalent assets to support kind of different currency pairs. And there's some interesting mechanisms around that we can go into later. But the core idea is to USDC. So if a trade goes up plus $100, that gets paid out from the liquidity pool. If the trader goes down $100, the trader pays into the liquidity pool. And then all the time, each time there's a trade, there's this constant fee being taken on these trades, which means that the liquidity pool is able to paint the tape somewhat on either side of the trade so that there's that guaranteed return. That doesn't mean that the LPs are overly exposed to that risk.
Got it. I understand. Okay, so the perp dex itself, where is that going to reside? Is that going to reside on Ethereum or Base or somehow on the Bittensor EVM substrate? Where does that live?
So right now we're looking at Base is where this will be living. The reason for that, I think it's one of those things where right now the liquidity in the ecosystem is mostly on Base. And I think that's where a lot of the traders and a lot of the institutionals are bringing capital into it. And the interesting thing here is that we really want to try to break down the barriers between Bittensor and the other ecosystems, right? And so because the miners have to just provide USDC liquidity, well, we might as well go to where the USDC liquidity is today. And I think right now that is either Base or Ethereum layer 1, but Base really gives us all those extra benefits by being a layer 2. And so not only are we now tapping into a much bigger liquidity pool, but we're actually giving that liquidity pool exposure to Bittensor just by them just providing their stablecoin liquidity. And I think this is something that right before we got on the call, we had a brief chat about how do we get more normal people into Bittensor? How do we get them more into alpha tokens? And I think the big issue right now is everybody has to buy alpha tokens. And it's really hard for your average user to mine alpha tokens unless you kind of get through the whole mechanism to understand that.
Totally agree.
What if you could just stake your USDC that you have on hand, and in return you get alpha tokens, plus you get some yield for your troubles on your USDC? And that's really the pitch here of how do we actually get into this much broader pool of liquidity.
That is super awesome. And I completely agree with you. We need to, as a community, do more to reach out to, the crypto normies on the other chains, in the wallets they already own, on the chains they're already on, using the assets they already have. USDC on Base is clearly one giant use case of that. So those people, you're like, so to them, the pitch is, hey, there's this new Perp DEX, which is dealing in ForEx, right? And we're looking for liquidity, and you can earn some Bittensor subnet tokens alongside the trading fees. In order to get the rewards from the chain, how do I need a Tau wallet, or are you somehow using the sturdy base tokens? Like what does that look like to a new user?
Yeah, so that's something that we'll be sharing some details on that right now in the next few months coming up to launch. So there's a number of pieces here of kind of abstractions that we're building around how to streamline this for users. I think, candidly, it'll probably be for the first versions, we'll likely have a bit more Bittensor native requirements as anything in the ecosystem on kind of V1. But the objective here is really in the long run to really streamline as much as that as possible for users. And we can go into some of the technical details if we want, but there's a few games that can be played in terms of exporting EVM addresses, substrate addresses, and kind of figuring out how to kind of structure these pieces. But the goal for us will really to be something where anybody, even your most kind of average user that's only really bought meme coins, can now come in and provide liquidity to support these currency meme coins instead, meme coins for the countries.
Yeah. Well, I really love the idea of just supplying USDC. Just show up. Oh, I know what this is. Supply liquidity like I would on Uniswap or whatever. USDC in, boom, good. Now I have an LP position, and I guess I lock it up maybe for some period of time, and I'm earning X percent. There's probably some, prediction or some gauge of what it's likely that I'll earn, so I at least have some idea. And then plus I'm earning these subnet tokens. That is fantastic. I love it. And so what do the mechanisms look like under the hood? In other words, it seems to me like this is a very curve finance kind of thing, right? So are you in fact using Curve on some level, or are you using the Curve contracts, or are you rolling your own? What does that look like?
Yeah, so we're actually going to be looking to use another established perp deck, so GMX as kind of its core mechanics behind this.
Yep.
So Curve, definitely very interesting things that you mentioned that, because there's actually some governance elements that we'll be looking at as well that kind of leverage some of the Curve elements. And when we talk about the alpha token utility, I can go into that in a bit more detail. But fundamentally, will be GMX platform where each pool is a GM pool where it has the index. So for example, euro dollar will be euro USD, and that's collateralized with USDC on both the long and short. So unlike GMX, where normally you have one long asset, one short asset, here we have the same for both. And then that means that pool is providing the liquidity for those trades. So anything that happens when you open a trade and you pay the little trading fee, that goes into the LPs as a reward. Then when you close a trade, whether it's a profit or loss, that kind of settles out the difference between there. And then you have the funding rates that are constantly being paid into the pool for the LPs as well. So that's the high level mechanic. Then in terms of the second level, in terms of where do these fees go and how do they work? Well, the first element is that 60% of the trading fees of any protocol revenues go back to the LPs directly. And then of the remaining 40%, 30% are now provided in a staking contract where users who stake alpha tokens are now able to claim those rewards from them. And so this creates an ability for speculators in the market who want to get an exposure to this exchange and the profits that are making to actually stake their alpha rewards to get these rewards, these additional 30% of the fees. But then also creates an incentive for the miners to hold on to their alpha emissions so that they restake and maximize their yield on their positions. And
got it.
From an economic design perspective, miners are incentivized to lock up their alpha. And then as a buyer or holder of the alpha token, you will also benefit from the fees. So massively beneficial to be either participating or to be a holder and lock up for as long as possible. So from a design perspective, it's pretty ideal, I would say. And then, I think the other mechanism that we're looking into is, there's only a certain amount of miner slots on the network, and it's allowing essentially pooling of resources to individual miner slots. So, for example, you could have an individual, say the minimum contribution to compete as a miner is $1 million, right? At some point. Well, not everyone has $1 million on them, but they can pool funds to compete as a miner, and then they share the resources or the rewards from the mining slot. And so that's the design that we'll eventually get to, where that's kind of how you scale to very large amounts of liquidity, even if our miner slots are constrained.
Very interesting. Yeah, I was headed that direction next, because it feels like this is the sort of thing where to really succeed, you need an enormous amount of liquidity. Right, so you got to basically pitch the world on, all you people out there, give me your USDC and lock it up for as long as I can convince you to do it. And to the extent that you can do that, now your Perp DEX becomes the premier place to do Forex trading in that 7.5 million a day total addressable market. Oh my fucking God, that's enormous, right? So, but if you can get the liquidity, right? So that seems to me to be the challenge. How will do you have a marketing plan for this, or is it just sort of, the Bittensor is the marketing plan? How do you plan to approach the holders of the liquidity that you hope will enter into your Perp DEX?
Yeah, so maybe before you go into the marketing plan, just kind of like our thinking here and why Bittensor is so interesting for this kind of structure. And I think the beauty about this, first and foremost, is that this kind of highlights how Bittensor has nothing inherently AI at the core incentive layer. And this is really just an incentive orchestration layer where we're orchestrating how do we get liquidity in the door. But the cool thing is, in terms of the first revolution of the flywheel, just kind of get it moving, is fundamentally the difference between this protocol versus your traditional kind of like the way that GMX or Uniswap or SushiSwap got their initial liquidity is they provided tokens out to the community, and those tokens had a value because somebody went out and LP'd into the pool to give that value to provide the LPs the incentive to stake those tokens to allow others to trade on it, right? The interesting thing about Bittensor is that unlike Ethereum, where we don't have to go out and create this magical kind of like LP pool with some other capital externally, we can leverage the actual workings of the protocol itself to actually give that initial value, where if you want to earn a yield right now, there's already a specific number of yield that you'd be providing if you tomorrow we opened up the miner slots. Just based on the current emissions of the subnet, you'd be getting those rewards. And so that's the first incentive there where we can say, okay, look, there's a yield from the incentives of that somebody's going to want to lock up their capital at. And there's usually a yield clearing rate where wherever that lands, that's what people will trade to. Yeah. That initial liquidity seeds the initial liquidity required for the first traders that can also get rewarded in alpha through some mechanisms of us passing through some of those alpha rewards to them. Now have this kind of outsized return by trading on the platform and then getting those alpha tokens that they can claim a portion of that further down the line, the next trader is going to get less and less and less of, right?
Yes.
And that provides the yield for the first miners, which then pushes up the incentive for them to stake more, which then provides more liquidity. And so this is how I think Bittensor kind of solves the chicken and the egg problem of any kind of like market, because you're able to solve the supply side first by leveraging the natural demand for Tau, which is then translated through the alpha token, but then using that now to actually provide an asset that others can trade on and then kick off this kind of flywheel of a commercial structure that makes sense.
That is absolutely fascinating. And yes, I was around for when Uniswap and SushiSwap booted up. So, and I remember, and I did provide liquidity to both of those at certain times. And I was rewarded both in the trading fees as well as in the sushi token or the uni token, which I could then lock up and get further rewards on. So I'm familiar with that whole boot, and that worked incredibly, extraordinarily well. You add on top of that the Bittensor natural dynamics of getting Tau, Tau emissions, even if it's rehypothecated as subnet tokens, it's still, under the hood Tau. It just sort of with another layer on top of it, for which there is great demand. And so I totally get what you're saying. It makes complete sense. And so just to go back to, Arash was talking about miners in your universe. A miner is not an AI miner, which is the way it normally is in a lot of Bittensor space. It has nothing to do with AI. It's just you're supplying liquidity. That's mining, right?
Yeah, this is initially.
Yeah, okay.
I think there's a lot of components long term to get to an institutional grade DEX, which is kind of the direction we'll be heading in, where you're going to want an on-chain order book. And so there's market making involved. And so with those components, it starts getting more sophisticated, right? But in the beginning, in terms of getting a product out and then iterating quickly, in the beginning, we won't have as much of that. But we will be heading in the direction where there's more orchestration, more intelligence involved. And so it's more just, we understand how to roll out products and to do it in phases. And so a lot of this is coordination between the GTV side and the Taoshi side, and then mixing in Erkin's knowledge of the markets as to what do the users want? How do we get this off the ground from a subnet perspective, from a product perspective with the DEX, and get this out to users immediately, or as soon as, essentially as soon as possible, and then build towards a highly, highly liquid, product. When we think about, some other, products that have done this, Woo did this with WooFi and then releasing Woo DEX. And so we're kind of learning from others and how they rolled out their DEXs, and then more of an institutional grade DEX. And so we're taking a kind of a similar approach from what we've seen others do.
Got it. And so what is the state of Subnet 35 Cartha right now? Is there any way to supply liquidity and mine it, or is that coming in the future? Where is that at?
Yeah, that'll be coming in the future. Right now, we're on a miner burn on that subnet. So just in terms of a bit of background here. So I'm, first of all, I'll introduce myself quickly. So I don't think I did.
Yeah.
I'm Victor Teixeira. I'm a fund principal at Contango and also the CFO of GTV, General Tau Ventures. We're primarily a venture builder in the Bittensor ecosystem, as well as an accelerator. We've helped launch 5 subnets in the ecosystem. We also currently run the Roundtable 21 validator as well. And we've been quite involved in mining in a number of other spaces too. And really what happened with Subnet 35 was one of our first investments into the ecosystem. And the way that we invested in the ecosystem was that we had a decentralized AI fund. And what we ended up doing is through that, we discovered Bittensor. And we said, okay, how do we get involved in this ecosystem? And so what we did is we looked through our portfolio and actually found a few companies that were very, very interesting for specific use cases on Bittensor. And Subnet 35 was one of our companies called AIT. They launched LogicNet in the ecosystem. It was a research subnet focused on developing a reasoning model. This was well before DeepSeek R1 that we were kind of doing this already on Bittensor. And we built this in conjunction with our Portco AIT. And then really following kind of the evolution into detail, the reality was the subnet kind of didn't make much sense in terms of the research subnet in that direction. And so AIT left the ecosystem. We took on full ownership of the subnet. And now we're providing the subnet to be relaunched into as part of Cartha. And so right now it's on a minor burn. It's been halted, but the goal now is really to start building out these slow pieces where we can start onboarding miners hopefully in the next few months. By the time this goes out, hopefully we should have some announcements coming up on kind of timelines, et cetera, around this. And then really allowing this kind of flywheel to start going and kind of kick this off from there.
Yeah, that is super. That's super interesting. Wow, I'm actually kind of blown away. I think what you're doing could be one of the largest subnets. I actually, there's a lot between here and there, but if you are in fact able to get the amount of liquidity that would attract, a lot of that 7.5 trillion into this universe, the potential is quite enormous. So congratulations. I love all the thinking behind this too. It really feels like a really well crafted, well thought out thing. So, and strangely has nothing to do with AI, right? So which is sort of Bittensor heresy, maybe not, right? So I think there are a lot more people sort of coming around to the idea that Bittensor isn't an AI thing. It's more of a incentivization alignment engine that can be used for many things. We see things like that with Bitcast, right? So which has nothing to do with AI, although it uses AI, right? So AI watches the videos in the Bitcast network to see if they comply with the briefs or the ad that is supposed to be in it. So there's a little bit of AI. Are you guys using, like Bitcast, are you guys using AI anywhere within your stack at all, or is it just not present?
And look, in the beginning for us, as Victor explained and Arash mentioned, we want to bring out the product to the market that users can use and they can see the value of what we're trying to do.
Yeah.
But there's a lot of directions where we can bring in AI, and we have a lot of ideas that we're kind of going through right now, be it on looking at the allocation of liquidity through AI, performing the analysis and coming up with efficient ways of allocating liquidity, being on the user side and supporting users in their trading journey as assistants, be it on the other side whereby AI drives sort of in future some of the logics when it comes to market making and so on. There's a lot of narratives that we can explore, and we already have, the team has a great deal of experience in this direction on all of the ones that I mentioned. So there is going to be a lot of exciting stuff coming through, but for us, based on our experience and the way we're driving this forward, still our focus on a high quality product for the users to experience first, and then evolve it. And the very most important thing is user always comes first, right? We're not trying to become another traditional broker that just wants to sit there and collect user P&L. For us, the interesting thing is to bring value to the market, bring innovation into the FX space, which hasn't existed for more than 20 years, right? Only functional innovation, but no fundamentally nothing has really changed. It's the same playbook over and over again. And first time in history, we're actually given the opportunity to completely democratize the CFD space and give the opportunity to retail traders to be both on the trading side and have a fantastic experience and trade all markets with no boundaries, no borders. And on the other side, actually take a piece of a brokerage, piece of the pie of a broker's earnings, right? Provide liquidity, right?
Yep.
Just so the audience also understands, the way brokers essentially make money is a lot of people think the P&L, when the user loses, broker earns. In not so candid players, sure, but in general, the biggest and most successful guys out there, the revenue is spread. The difference between buy and a sell price, because markets is zero-sum game, right? For somebody to buy, somebody's got to sell. And with enough population, it all nets to zero, and the only thing is left in the middle is a spread, right? with these liquidity pools, we're given the opportunity for the people to take that position.
Yes.
And over the course of time, there's nothing but profits.
The house always wins, and this democratizes the house.
It's purely mathematics, right? It's the law of markets. There's no other way for the markets to work.
Yeah. Yep. Yeah. No, this is fantastic, and that's actually one of the things I really loved about DeFi was, it's the most. It achieves, like I watched Elizabeth Warren talk about, like, protecting the little guy and giving the little guy an opportunity, but she hates crypto. But I'm like, wait, in DeFi, decentralized finance, it basically takes the function of banks and the function of exchanges and democratizes that amongst the people. Everyone can become a little tiny fractional mini bank or mini exchange just by participating in liquidity pools. It accomplishes the goals of socialism, the stated goals, but with capitalism. It's fantastic, and you guys are doing another iteration of that same idea. So I applaud you. I think it's like morally correct, right? I think in addition to being very profitable, hopefully, it's very good at the same time. And that's actually one of the things that excites me about, both the crypto world and now the AI world, right? So congratulations on everything you guys are doing. I love it.
Thank you.
How come? Let's talk now a little bit about competition. So I've had Andre Cronje on this show. I don't know if you guys know that name, but he was the guy who was sort of the main guy behind the Phantom blockchain, now known as Sonic S. And there was a little period of time when Phantom was like one of the hottest chains out there, where Andre was talking about going after the Forex market for exactly the same reasons that you all state, right? Because his chain has sub-second finality and giant and now giant scalability with the Sonic release. So it theoretically is super ideal for a lot of these high frequency, high volume trades, provided there's enough liquidity on the chain. And Andre recognized that. Who else has gone after? Are there any other successful DEXs going after this Forex market? Because I'm not aware of any, but I don't look at this side of the world. I look at the crypto side of the world, and where those things are trading, not really sort of the real world, Forex stuff. That's not something I've looked a lot at. I can't believe somebody hasn't cracked this at scale yet, but I guess nobody has. What does the competitive landscape look like from your viewpoint?
It's quite limited. To be candid, I think there's a few players out there. Zave is an interesting player. They have a kind of a curves type style stable swap for RWAs. Paxos also has a number of RWA assets. RWAs are getting there. I think the focus right now in RWAs is still the primitive, where they're really focusing on tokenizing an asset and then actually putting that forward as a money Lego. But what nobody's really done is taken the perp systems and really try to money Lego those, now allowing for these kind of more advanced products to be built on top of this. And just to mention a few interesting examples that kind of this opens up is that if you now have a permissionless FX layer, well, you can absolutely do things like if you are living in Japan and you are buying Bitcoin USD, you're also taking on USD JPY risk, right? And so now you could actually neutralize that Bitcoin JPY risk and just trade that purely completely hedged by adding in these kind of permissionless money Legos. And so it really adds up on these levels of how can we build these structured products that make sense for the ecosystem. And really, it's similar to Andre Cronje's vision back in the day, where the Dairy Swap Medium article is one of the ones that kind of really got me going in terms of what's possible in the ecosystem. It's really this kind of vision of how do we create this capital efficiency in the ecosystem where if we can hedge risk, you can lever more. And that kind of kicks off this flywheel to really go down this path of making this bigger and bigger. And I think, unfortunately, in the ecosystem, and I think fortunately in a certain way, the ecosystem has solved a lot of the problems for much more higher risk assets, being, BTC, ETH, and kind of all the kind of meme coins that you can lever up to like 50x right now on GMX and Hyperliquid. We've solved those, but because we've solved the difficult thing, we haven't really looked at solving the easier steps in the middle. And I think that's one big piece that just hasn't been cracked in the ecosystem. And I think, for example, what the Taoshi team has been building with SN8 and with Glitch is already kind of highlighting that this is what traders are looking at is still these traditional markets and still the FX markets, not just the crypto markets. And now there is that demand for everybody who's coming into this ecosystem. It's no longer just degens like us that were here during DeFi summer.
Yeah.
And for myself, I was an ex-investment banker at the time. I was still at the bank. And I remember like the first year of DeFi, I was at the bank just like screaming into the void. And everybody's like, yeah, we're not listening to him.
You're like, dude, there's a thing called Sushi Swap. It's awesome. And everyone at the desk is just like, fucking Sushi Swap? Are you serious?
What are you doing? No, and I was trying to explain to them how you could lever to like 50x on Cream, where you could just deposit, borrow, redeposit, and you could do these. And I was like, it's like a prime brokerage desk. And they're like, dude, go back to your job. Like,
yeah. No, I was in Cream Finance as well. I played with all those same things. So yeah, I'm totally, you're speaking my language. I remember all that stuff. Yep. Yeah. Some of it was terrible and some of it was genius.
Oh, and then there was a time when Cream Finance collapsed, and then they sent us the airdrop that was worth like 3x what we lost.
Yeah,
moments like that.
Yeah, it was a great time. May it come again in a new form. Hopefully, a little calmer, but yes, we definitely was some great stuff in there.
And maybe on Bittensor, and maybe with 0x markets.
Yes.
Now, when you start looking at the competition with several hundred million per month in revenue, right? And we start looking at people who still rely on MetaQuotes, which is like 20, 30 years old. The most recent version is about 15 years old. MetaQuotes is basically the main terminal that everybody uses to trade in the CFD space, whether it's Forex, commodities, whatever the case may be. And you start seeing how little innovation and how little product has come toward the users. And was always trying to drag users to come figure out how to work this complex piece of machinery. So what we're trying to do here is, it's insane. It's completely insane in terms of the market potential. It's the first of its kind at the large scale opportunity of hitting the market. Yeah, I've seen several guys trying to do something with some Lira, whatever the case is, with tiny order books. That's literally why Victor went, and as he explained, the designer, we're going down the path.
Before you were talking about the competition was making like something like 400 million per what was that, per day, per year? Like what are we talking?
Per month.
A month. 400 million per month. So incredibly profitable. So the idea is if you like insanely profitable, like ridiculously profitable, like Tether profitable. So if you can get to those kinds of numbers, this subnet will easily be the top subnet, maybe definitely one of the top ones for sure. So I have hopes that the other ones can do very well also. But yeah, let's
see if we can hit top 10 in the whole crypto industry. In the next 3 years.
Yeah, just in the entire crypto industry. Never mind Bittensor, just top 10 coins, a subnet token in the top 10 coins. That would be amazing.
I think the last piece we just didn't touch on is kind of the utility of the alpha token. And maybe I can go into that briefly here. But fundamentally, we want to try to make this ecosystem one where everybody has a reason to hold on to the alpha token. I think that's one thing that we still haven't fully figured out in the ecosystem is how do we get alpha tokens into users' hands and why do they want them? So the first utility here is that 30% of the rewards are going to alpha token stakers. So you stake the alpha token. There'll be a interface for you to stake your alpha tokens in there. You get rewards from those. And that's 30% of the trading fees. But the interesting thing is that we're also bringing in vote escrow governance, and this will not be part of the original launch of the V1, but will come in a future update. But the idea here will be that you can also do vote on where the alpha rewards go to in which liquidity pool, similar to Curve. And the intent here is to kind of create this secondary market where miners who are the LPs are incentivized to hold on to their alpha tokens to earn additional yield, but also to steer where the rewards go to the pools that make sense in terms of providing liquidity. So, for example, if a miner comes in and there's, say, 3 pools, one is Euro USD, the other one is GBP USD, and the third one is JPY USD, miners can actually vote with their staked positions to steer those rewards to those different pools, which will then incentivize traders to trade more on the pools that are rewarded, LPs to provide more liquidity into the pools that are rewarded, and then really kind of find those balancing mechanisms of where do we want to see the yield go, but also creating a constant demand pressure for the alpha tokens with this captive market.
There's also one last thing, which is there's some conversation we're having about integration of Subnet 8 into 35, like into 0x markets. So essentially funding traders, essentially, it could be our exchange where we actually have our traders trade, using our alpha tokens. So yeah, there's some really interesting, things that we're looking at there. So all of our traders would no longer be trading in a simulated environment, or they could choose to trade directly on the exchange rather than the simulated environment. Yeah. So that's one piece. And then the other is on the glitch side is integrating glitch into 0x markets. So there's a couple things there that we're looking into to expand a few things actually. One is being able to determine, essentially apply our incentive mechanism to all traders on 0x markets, and then discover and create strategies to glitch. That's one. Two is actually bringing in LPs from glitch into Cartha. So essentially, being able to deploy USDC pools, that's gonna be really easy, because we can allow US customer base, pretty soon here as an RIA. So, that'll be really powerful. So we can just directly onboard through the experience of glitch to bring on, more funds. And then, the last piece is, in the future, potentially doing A book versus B book, leveraging glitch, to external markets. So, there's a lot there, but there's a lot of pieces that will commingle between what we've already built and what we're building.
Okay. Well, gentlemen, thank you for your time, and thank you for giving us an update on some new stuff and giving us not really a scoop. I mean, I guess it's a little bit of a scoop. I guess there was a couple people that you guys reached out to. You reached out to me, so I do thank you for that. And thank you for your time. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.